Hello, everyone. Welcome back to another week of exploring the Forex market through the lens of price action based technical analysis. Good morning, good afternoon, and good evening to you, depending on whichever part of the world you are tuning in from. Well, first of all, before we kickstart, let's run through our daily routine. So, if you can see my screen and you can hear my voice very clearly, please let me know in the comment section by typing hi in the comment section. So, this will give me a positive feedback that we are good to go this morning. So, I would like to see your feedback, please, while I load up my charts and let's get this session started. All right. So I can see a couple of questions here actually. A couple of response. I see your comment, Wago. Good morning to you. Glad to have you around. Good morning to you, Carrie. Thank you very much. And I'll just take this as a positive feedback that we are good to go this morning. So it's on this note I welcome you all once again to yet another promising edition on the X Trend Speed Live technical analysis session. My own name is Sheriff Daramola, and for the next 1 hour, I'm going to be your host, where I will be taking you on a trading journey, looking at the current market structures using simple parameters and fundamental tools such as trend lines, key levels, and chart patterns to gain valuable insight into the historical price movement of these assets. So for this week, we are going to be taking a handful of assets which I already have on our watch list. But since today is the first trading day of the week, it is an opportunity for you. If you have any assets you want us to look at in this community for this week, so feel free to drop them in the comment section, and trust me, I will make sure that I include it into our plans for this week. So if you do have any, be it cryptocurrency, currency pairs, commodities, options, what have you, please let me know in the comment section. So for those who are joining us for the first time, you're highly welcome on board. And what we simply do here as technical traders, we gather here on a daily basis as a community in anticipation of the New York session, where we come to review our current positions if we have any, and of course use the information we can adopt from the charts to strategically position ourselves ahead of the New York session. And of course we do this on a daily basis, 10 a.m. UTC, 11 a.m. West African time. And I do encourage you to stay tuned in so you don't miss out on any of the valuable ideas we shall be deliberating on today. And of course, be part of our subsequent editions, as the more time you spend with us, the better you get to understand how our strategy works and eventually be able to use the information you gather in this community to make your own independent trading decisions. So once again, I welcome you all on board. So with that being said, here we shall be diving right into the business for today. And as usual, the first thing we normally do is to check on the economic calendar. Now, understanding the details in the economic calendar isn't just about fundamental analysis, it's also a crucial aspect of technical analysis too. And by looking at the economic calendar, we can easily identify potential correlations between key economic releases and specific technical patterns. And by knowing when major economic announcements are scheduled, we can anticipate potential volatility spikes, trend reversals, or even breakout opportunity. So like I used to say, it's like having a roadmap that guides our technical analysis decision. So stick around as we run through this. So we usually focus on high impact events from economic dockets that affects the assets on our watch list. And basically, and based on what I have for this week, we are going to be focusing on both the United Kingdom and the United States economic dockets. Now for today, October 23, the first trading day of the week, we do not have any high impact event, and in fact we do not have any medium impact event affecting the assets on our watch list. Now looking at what we have here, we have a couple of events from the United States, that is the Chicago Fed National Activity Index, and of course the month bill auction, which are not really that significant event actually. So in the absence of no major events for today, we will be relying on our technical skills to identify potential trading opportunities. However, we will also want to be taking into consideration the anticipation of high impact events coming in from the United Kingdom and the United States economic docket for tomorrow. Like we have a handful of S&P global publications for both the manufacturing, the services, and composite PMI from both the United Kingdom and the United States. And of course, we have labor data from the United Kingdom coming up tomorrow. And of course, as technical traders, we do know that the anticipation of these events alone has a tendency of influencing the market sentiment, which in the long run will result in the reflect on the chart as price action. So talking about price action here, we are going to be starting to this week with a technical analysis on the first asset on our watch list, which is going to be the USOILSPOT. And on the USOILSPOT, we begin to see some interesting situation gradually unfold on the chart as at this morning. So before we go into the details here, I would love us to run through the higher time frame so that we can have an holistic perspective into what is really going on in this market. In fact, the USOILSPOT will be considered as one of the most profitable assets on our watch list for last week, as we were buying the USOILSPOT throughout the course of last week. Now, our first step for this week is to run through the 4 hours time frame, where I was able to identify a simple setup that we are going to be using to guide our trading decisions for this week. Now, if you look at the 4 hours time frame here, what I did was to take into consideration the nature of price action since the beginning of the month of September. And if you look at the structure closely, you will see that we are gradually noticing a transition of price action into a downtrend continuation pattern on this chart. Now let's take a quick look at what is really going on here. Now remember that during the previous week, I think during the last trading week of the month of September stroke the early week of this month, we were hearing the news of the potential deal between the United States and the Venezuelan government as regards to lifting some of their bans so that they can start pushing their oil into the supply chain. And as a result of this development, we begin to see the fear reflect on the chart as we saw price action crashed from that $94 area back into the $81 area as a result of this event. But since we are yet to get any traction, and coupled with the escalation going on in the Middle East, we begin to see some confidence gain back into the market as price action climb back up again. And while trying to climb up, we can see that price action transitioned into a downtrend continuation pattern in the form of a wedge. Now, to give you a visual representation of what I'm talking about here, so we have the impulsive move bringing price into the $81 zone, and throughout the course of the last couple of weeks, we saw price transition into a wedge pattern, which from a technical standpoint is considered to be a trend continuation pattern. And if we consider the bearish impulsive leg, it's more or less a sign that price is likely going to be going to the downside. And if we look at the theoretical expectations from the structure, we are looking at price breaking down the support line, retest of structure to give us a beautiful confirmation to join the downtrend move. However, it is worthy of us to note here that it is not all the time that this kind of situation happen, as this is just a theoretical expectations of this current market structure. At times the market does not fall through with this. Instead, it might go the other way and continue to the upside. So we are going to be taking all this into consideration while we make our decisions on the lower time frame. Now, in addition to this pattern, and to make things a little bit easy for us to be able to position ourselves ahead of the next move, we are going to be identifying a key level. And I was fortunate enough to identify something around the $87.50 level, which is going to be playing a major role in determining the direction of price action for this week. Now, if you look at the structure, the reason why I have chosen the $87.50 area is simply because of the major role it had played in determining the direction of price action since the beginning of the month of September. Now, if you look at the first week of September, you will see how the $87.50 level was more of a selling niche in this market, as it's played a major role in negating all attempt by the buyers to break out of that structure. However, during the second week of the month of September, we finally saw the breakout of that structure, and since that moment, price action was trading above that level all the way into the first couple of days of this month of October. And finally, we witnessed the breakdown of the structure during this third day of this month as price dropped to the downside, breaking down that structure. And in the last couple of weeks, we've seen a situation where momentum was building up back into that area. And in fact, we saw the breakout of the structure and price came back to settle around that key level during the end of last week trading session. And as it is right now, price action is continuing to oscillate around that zone, giving us a sign that we are at a crucial juncture in this market. Now, with this information we have here, with a beautiful key level at the $87.50 area, we want to scale down into the lower time frame so that we can see how participants in this market has been reacting to this key level since the beginning of the week to give us an insight into where the next line of action will be. Now, remember that the way we use our key levels in this community, if price remains below the key level, we definitely want to be looking out for patterns and structures that supports the idea of selling that asset. And let's scale down into the lower time frame so that we can see what is really going on here. Now, scaling down into the lower time frame, this is what I was able to spot here this morning while trying to dissect the current market structure. Now, the first thing you will notice here is the $87.50 area, which is standing out here and is going to be playing a major role in determining the direction of price action for this week. Now, in addition to the key level is the nature of activity since the beginning of this week. So we had a bearish gap here which revealed the tendency of trading activities during the course of the weekend as price action closed last week around the $87.98 area and resumed trading activity around the $87.60 level. Now, we saw the week started on a bearish note as we saw price drop down into the $86.60 level, which happens to be the lowest point price action has been for this week. And immediately price tested the $86.60 level, we saw buy pressure resume, bringing price back into that resistance zone, as you will see right here, giving us a beautiful flat channel to work with. And as it is, as at the time I was doing this prior to the live session, we can say that price was confined within the $87.60 level and the $86.60 area, a $1 range to emphasize the level of indecision at the beginning of this week. And this is a sign. And whenever we have this kind of situation, you know how we do it. We have a flat channel like this. We do want to exercise patience, waiting for either the breakdown of the support line to give us an opportunity to sell, or the breakout of the resistance line of the range to give us an opportunity to buy. And if you look at what has been going on here in the last couple of hours, in fact, I had a buy stop order above my key level at the $87.50 area to capitalize on that uptrend. And as you will see, we have a buy position on my own end here triggered. Now price is back under that structure, giving me a losing situation at this point in time with about how many pips that is. I think about just 10 pips. I think a 1 pip to 2 pips in loss right now. And you know, from a technical standpoint, when we have a breakout of a structure, we expect price to do some retracement into structure before that uptrend scenario happens. So at this point in time, we want to be looking out for buying opportunities above or around that area between the $87.60 area and the $87.50, while our stop losses will be anywhere below the support line of that range. So at this point in time, we're looking out for buying opportunities above that key level, and if price action continues to climb and go to the upside, then we want to be looking out for more buying opportunities at the breakout of the highest point price action has been in the last couple of weeks, and that is the $89.50 area to add more buy positions to our existing trade. So at this point in time, I'm still looking towards a bullish momentum here above that key level. However, in as much as we're looking out for buying opportunities in this market, you know how we do it in this community, we also want to keep tabs with the opposite direction too as well. And if we consider the bearish impulse leg that started last week Friday, we might likely be seeing a situation where price will drop to the downside. And don't forget the structure we saw on the 4 hours time frame, where we were able to spot a falling wedge, which is a downtrend continuation pattern. Let me show you one more time, please. So you see we had a falling wedge here, and with the falling wedge, and if price remains below that key level at the $87.50 area, we might likely be seeing some selling pressure push price to the downside. Now, if this is going to be the case, then we can actually be part of that move by capitalizing on the breakdown of the support line of this range at the $86.60 area to join the bearish momentum to the downside. And if price continues, then remember that we have a level here at the $85.50 area, which happens to be the lowest point price action was during the last week trading session, to welcome more selling opportunities. So you do want to be marking out these levels on your chart, as you will be needing them as a reference point to guide your independent trading decisions for today. So basically, our center of focus for today's trading session is between that $87.50 zone and the $86.60 area, where, depending on the direction of the breakout, will give us a clue of where price action is likely going for today's trading session. So I encourage you to mark this level out on your chart. Wait for the breakouts of structures to happen before we want to be jumping into any positions at this point. So these are my views on the US All Spot for today. Let's see how the market is going to be playing out from this point in time. If you have any questions, or you need me to shed more light in a particular area you find difficult to really understand, feel free to let me know in the comment section, and trust me, I am here and willing to be of help in that regard. So as usual, I will be taking the next 10 to 15 seconds off to see if there are any questions, so that I can attend to them, and if there are none, we'll just move on to the next asset on our watch list. And you can also use that time to mark out these levels on your chart. All right. So, in the absence of no questions, I want to assume that we are all on the same page, and in that regard, we shall be moving on to the next asset on our watch list. So, moving on. So the next asset on our watch list for today is the USTech100, which is popularly known as the Nasdaq. And in fact, I have a tremendous two sell positions running at this particular point in time, which is giving us a signal that we are likely going to be seeing a sell-off in this market after such a long time. Remember, this market has been on a very strong bullish momentum since the beginning of the year, and it appears we're beginning to see sellers gradually come into this market. So let's look at things from an holistic standpoint, and let's see what led to my decisions here on the 1 hour time frame. Now, we are going to be scaling up into the daily time frame where I was able to, I think we've been talking about this for a long time, as you will see on the daily time frame that the trend is obviously very bullish. And in fact, we have a couple of ascending trend lines here after connecting the series of higher lows to emphasize the bullish momentum in this particular market. However, something interesting happened last week. I think the later part of last week, even there was a build up even into last week trading session, as you will see that since price action tested that high at the 15,950 area in the month of July. Since that moment, we have seen a nosedive to the downside, which is characterized by lower highs, giving me this descending trend line we have here. And this momentum we see here has gradually been pushing price to the downside, which has finally led to the breakdown of that ascending trend line for the first time this year. And with the breakdown of this ascending trend line, we are likely going to be seeing a sell-off go on at this point in time. But we are not going to be jumping into conclusions from a long-term perspective here, as we will need to see some confirmation that really convinces us that we do want to be selling the US Tech 100. Now, to make things easier for us to capitalize on the next move, we do want to be having our key level, which is currently situated at the 14,500 area, as you will see here. Now, there is one peculiar thing about this key level since the month of June, as you will see that since price broke above this key level in the month of June, it has consistently become a platform for buying opportunities. Look at what happened here in the month of June. We saw buy pressure here. We saw how it has always been difficult for sellers to break through this area. Fast forward to the month of August, the same thing happened, buy pressure. Look at what happened here in the month of September. Despite the lower highs, we saw buy pressure resume around that area. The same thing at the beginning of this month, and right now, after price has broken down that ascending trend line for the first time this year, we can see that price is back into that 14,500. Now, with the information we have right now, you would agree with me that we are at a crucial juncture in this market where, depending on what happens around this area, will determine if we are truly going to the downside or not. Now, before we scale down into the 1 hour time frame where we want to see how participants in the market has been reacting to this key level, we also want to take into consideration that buyers could come in at some point with a short-term view to retrace back into the ascending trend line that was broken to inside the downtrend scenario. So we are going to be taking all this into consideration. So if we see buy pressure here, we know that we have a minimum of about 350 pips to catch, with the expectation of a retracement into the ascending trend line before the downtrend continuation happens. And in fact, if we see price break down the 14,500 retest structure, then this is obviously going to be a beautiful confirmation to join the downtrend. Now, with the information we have here on the daily time frame, let's scale down to the 4 hours time frame and see what is really going on here. Okay, still the same thing, nothing really. So let's run down into the 1 hour time frame to see how participants have been reacting to this current structure. So during the early hours of today, while I was trying to dissect the current market structure, this is what I was able to come up with. So at the beginning of the week, we saw this range where price was initially confined within the 14,615 level and the 14,545 area, though the week started with a bullish note. But as soon as price tested that 14,615, we begin to notice selling pressure resume around that area, making that zone a resistant line for this particular range. And of course, you know how we do it in this community. As soon as we spot an indecisive phase like this where price transitions into a range, we want to exercise patience and wait for a signal to come, either in the form of a breakout retest of the 14,615 to join an uptrend situation, or the breakdown retest of the support line to incite a selling opportunities. Now, you see what happened here about a couple of hours ago. Price finally broke down that 15,045 level. 14,545 level. Price came back to retest the structure, and since that moment price has been dropping to the downside, and in fact we just witnessed an engulfing bearish candle slicing through our key level at the 14,500 to make a statement that sellers are getting stronger at this point in time. So currently I have 2 positions running at this particular point in time, and if you are taking advantage of this opportunity, well done to you for capitalizing on this move. However, if you missed out on this one, it's okay. The week is still very early, and we need to exercise patience and wait for new structures to emerge to guide our next decisions at this point in time. However, for those who are taking advantage of the sell position right now, I will be advising you at this juncture to move all stop losses above the second entry zone between the 14,500 and the 14,530. Secure this position while you keep in mind that you do want to be given enough room for price action to breathe. Now, with a well secured position at this juncture, what is going to be our next line of action? Well, first of all, it's obvious that sellers are gradually dictating the pace since the week has started, as we have seen price break down that crucial 14,500 zone, which has been a formidable demand zone in the last 3 to 4 months. Now, with the situation we have here, we all know that from a technical standpoint, when price breaks down key structures such as the 14,545 and the 14,500 level, we expect that some point in time price may come back, retest any of the structure. It could go as far as this or this area, but most importantly, we want to see signs that buyers are not finding it easy to climb back into that channel we identified earlier, and this would reflect on the chart as selling pressure leading into a situation that will incite a downtrend continuation. So for those of us who had missed out on these selling opportunities, let's wait and see if the market will present new opportunities in the form of a retest of the zone between the 15,545 and the 14,500 area. So let's see if the market will retrace back into that area. So that is one perspective we are going to be looking at for today as regards the USTech 100. Now, the second scenario that could happen here is if price decides not to go back into structure and retest it, that is, the selling pressure was so strong that price does not go back into that area, then we might likely be seeing a consolidation phase around this area where price transitions into either a falling wedge or a bearish rectangle pattern where the breakdown of this lowest point will incite a downtrend scenario. Now, to make things easier for us, I would like to mark out the support line of this range, which I think she'll fall around this area. So let's look at what this looks like when we bring out our candle chart. Okay, so we have something like this. So let's use the 14,430. Let's mark out that area. So you do want to be doing that on your chart right now, as we will be needing it as a reference point to guide more selling opportunities in this particular market. So that's the lowest point price action has been for this week. We might likely be seeing price do some consolidation phase if it refuses to retrace back into structure, and it might transition into something like this, breakdown, retest to incite a sell-off. So everything at this juncture in the market is screaming bearish at this point in time. So we are holding on to a bearish bias based on the current market structure we are seeing right now. However, in as much as we're looking out for selling opportunities, you know how we do it in this community, we also want to keep tabs with the opposite direction too as well. Now, what are the potentials that the buyers have in this market, and what is it that we want to see on this chart that will make us feel comfortable changing our bias from bearish to bullish? Well, like I said earlier, there are still chances that price could retrace back into structure to incite a downtrend scenario. Now, if price will retrace back into structure, and in fact, while it's doing the retracement, it consistently finds higher highs and higher lows, this will be a very good signal that buyers are gradually gaining momentum, but we will need it to climb back above the support line of the range we identified earlier, that is this range between the 14,615 and 14,545 area. Now, if price climbs above that range and it becomes difficult for sellers to drop below that structure, and we begin to see buy pressure around this area, then we would want to get ready to join an uptrend situation as price action is back above the 14,500 area. Now, if this happens, it might even drop into the structure before the uptrend continuation happens. We do want to be part of a bullish opportunity there, and if price continues to the upside, taking out the resistance line for this week at the 14,615, then we do want to be adding more buy position. But as it is right now, everything is looking very bearish. But one thing I would like us to take note is that remember what we saw on the daily time frame, where we talked about the potential of a retracement back into the ascending trend line. So for the sake of clarity, let me show you one more time so that we can all be on the same page. So we saw the ascending trend line here broken down for the first time this year. And like I said, when price break down a key structure, we are likely going to be seeing price retrace back into structure, which lines up with that descending trend line to incite a bearish move, which of course we calculated to be around 350 to 400 pips to catch there. So if we see this kind of higher highs and higher lows on the lower time frame leading into that climbing back above the support line of the range we identified on the 1 hour time frame, then we might likely be seeing the beginning of a retracement back into the ascending trend line that was broken to the downside on the daily time frame. So let's see how this will play out for today. If price climbs back above, then we do want to be getting ready to buy. Then a breakout of the 14,615 will be a very strong signal that price is retracing back into the ascending trend line that was broken. So let's see how this is going to play out. You do want to be marking out these levels on the chart right now as we continue to monitor price action. So I do not know if you have any questions. If you do, feel free to drop them in the comment section. Trust me, I am here and willing to be of help in that regard. So as usual, I will be taking the next 10 to 15 seconds half to wait and see if there are any questions before we move on to the next asset on our watch list. All right. I see a couple of comments here. Sad2420, good morning to you. Glad to have you around. Buzard, good morning to you, Buzard. Sita, good morning to you all, and glad to have you around this morning. And you are very much welcome to the Extreme Speed Live trading platform. So, with that being said here, and in the absence of no questions, I want to assume that we are all on the same page. And in that regard, let's move on to the next asset on our watch list for today. So the next asset on our watch list for today is the GBPUSD, popularly known as the cable market. And in fact, I already had a buy position trigger this morning, but I'm currently running in a loss right now based on what is going on in the market right now. But before we go into the details here, it is important that we take a step further to look at what is going on the higher time frame, and let's see what led to the decisions I had made so far this week. Now, the first thing we are going to be doing here is to scale up into the higher time frame, and I think I started my analysis on the daily time frame. Now, if you take a quick look at what is going on in this market since the beginning of this year, one peculiar structure you will see here is that demand zone between the 1.2 and the $1.18 area. You can see what has been going on here. In fact, since last year, November, this area had been serving as a strong demand zone in this particular market, and every attempt by the sellers to break through the zone has been met with strong resistance from the buyers. Now, the pounds maintains its position above the 1.2150 level in the last couple of weeks, showing some resilience despite challenges in extending its winning streak in last week. So throughout last week, it was more of a consolidation phase, which emphasizes the level of indecision that is going on in this particular market. And a slight uptick in the US dollar coupled with the ongoing Hamas-Israel conflict poses a potential threat to the pound sterling, especially in anticipation of this week's crucial UK and US data releases that we are looking forward to starting from tomorrow's trading session. Now, let's look at things from a technical standpoint. Now, for the fact that price still remains above that demand zone, it makes quite a lot of sense that we look out for buying opportunities. However, if you look at what has been going on here since the month of July, you will see that after price testing a new high at the 1.314 area, we saw price nosedive to the downside, and during that course, it transitioned to a consistent and uniform lower highs, giving us this beautiful descending trend line to work with for this week. Now, in addition to this trend line here is the appearance of a potential reversal pattern. As you will see here, despite the strong bearish momentum since the month of July, price has since been confined within the 1.2315 and the 1.200 area to emphasize the indecision going on here, and in fact this has lasted about 3 to 4 weeks now. Now, if we now take a closer look at what the consolidation phase is looking like, you will see that it appears that price action is gradually transitioning into a reversal pattern in the form maybe a double bottom structure. Now, if we take into consideration this impulsive move into this area around the 1.2 ish, you will see that price climbed back into the 1.2315, and throughout last week, all attempt by the sellers to find new lows was negated by the buyers as price was unable to break down the previous low, and since buy pressure is gradually emerging around this area, we are likely going to be seeing a reversal pattern in the form of a double bottom structure where the 1.23150 could serve as the neckline of that reversal pattern. And of course, whenever we have this kind of structure, we need a validation to happen, which of course will reflect on the chart as the breakout, retest of that neckline to incite an uptrend move. However, in as much as we are waiting for that neckline to break out for buying opportunities here, it is still very possible for us to actually look out for buying opportunity within this range around this point. Now, to guide our trading decisions for this week, I have identified a simple setup on the 4 hours time frame, which I would love to share with you in a moment. But before I go into that, I would like to mention here that if we are going to be selling the GBPUSD from a long-term perspective, that is, if you are a positional trader or a swing trader, it will make a lot of sense for this 1.2 area to be broken to the downside and retested before jumping into a sell position. At least we need price to break down this previous low to confirm that sellers will be gaining some momentum. But the fact that price still remains above that previous low for me is still a red flag that buyers could still come in. Buyers still have a potential of coming in. So let's scale down into the 4 hours time frame. So let me show you what I was able to come up with on the 4 hours time frame. Now this is the 4 hours time frame here, and this is the neckline of that potential reversal pattern we spotted on the daily time frame. Now if you look at what has been going on in this market since the last week of the month of September, you will see that we have a demand zone right here, and sellers have found it difficult to break through that structure. And throughout last week, we have been seeing this consolidation phase around this area between the 1.218 and the 1.21 area. Now, going into the new week, I have a level here at the 1.218, which I'm going to be using to guide my trading decisions for this week, as I will need price to break out of that structure for me to join a bullish momentum. And the reason why I need that is simply because of this reversal pattern here in the form of a double bottom structure. Breakout retest is all we need to join an uptrend move, so we can actually capitalize on a buy position even before the breakout of that neckline at the 1.23150 happens, to maximize the potential of that move. And one interesting thing about the 1.218 is how it also shares a beautiful confluence with this descending trend line here. So you can see this descending trend line here, and the 1.21, it shares a beautiful confluence. So if price breaks out of the 1.218, it would have also broken out of that descending trend line, which will be a sign that the trend line may no longer have the capacity to continue to negate the bullish attempt, where a retest of structure confirming the uptrend scenario. Now, to make things much more easier for us to capitalize on the next line of action, we do want to be scaling down into the 1 hour time frame so that we can see how participants in this market has been reacting to that trend line. Now, when we scale down into the 1 hour time frame, we'll begin to see things more clearly. So while I was trying to dissect the structure this morning, this is what I was able to come up with. So since the beginning of this new week, you will see that price action has been confined within a range that is between the 1.21660 and the 1.21450 area, to emphasize the level of indecision at the beginning of this week. Now, you know how we do it. Whenever we have this kind of range, we do want to exercise patience, waiting for either the breakout of the resistance line to give us an opportunity to buy, or the breakdown of the support line to give us an opportunity to sell. And don't forget that the trend line, the descending trend line we spotted on the higher time frame, is still right here, which interestingly shares a beautiful confluence with that channel and the resistance line we have here. Now, I already had a buy position running after I saw the breakout of the 1.21660, and of course that's descending trend line here. So I already bought around this area, but unfortunately price just dropped back down into this area, giving me a loss. I'm currently running in a loss of about 8 pips at this point in time. So with a stop loss sitting somewhere below the 1.21450 450 dovetailing to about 25 to 30 pips. I'm hoping that price will still continue to the upside. Now, with the way things are going right now, you will see that this area is still a formidable zone for buy pressure, as you will see that despite the strong bearish momentum, price came into the structure and we saw sharp rejection of that area, which is a sign that sellers are finding it difficult to settle below that level. So if this persists, then I would advise that we still maintain a buy position above the 1.21660 to capitalize on the uptrend continuation. And if price continues to the upside, we have the 1.21800 level to add more position if price action continues to find new highs. Now, with the information we have here, looking out for buying opportunity, we cannot ignore the potentials that sellers too can also come in. Don't forget that we are under the descending trend line right now, and of course when we have descending trend line, when price remains below the trend line, we want to continue to look out for patterns and structures that supports the idea of selling. Now, for me to sell the GBPUSD today, I would rather want to see price break down the 1.21450, that is the support line of that range, retest of structure for confirmations before I jump into a sell position. And if the sell position happens and continues to the downside, as soon as it gets into that demand zone, which we identified earlier, we move all stop losses, secure the positions while we wait and see how the market will react to that level. Now, if it breaks down, retest the structure, then we want to be looking out for more selling opportunities at this point. And if instead we begin to see buy pressure resume, evolving into a double bottom structure or any reversal pattern, then we will be getting ready for an uptrend move. So we are at a very crucial juncture in the market right now, and we need to be very, very careful. So our center of focus for today's trading session is simply between the 1.21660 level and the 1.21450 area, where depending on the direction of the breakout will determine where price is likely going for today. So you do want to be marking out these levels on your charts, as you will be needing them as a reference point to guide your independent trading decisions for today's trading session. So these are my views here on the GBPUSD. So if you have any questions whatsoever, feel free to let me know in the comment section. So I will be taking the next 10 to 15 seconds off, waiting for your comments or your questions, while you can also use that time to mark out these levels on your chart, as you will be needing them as a reference point to guide your trading decisions for today. All right. So in the absence of no questions, I take this as a confirmation that we are all on the same page and that everything I said so far has been quite explanatory enough. So with that being said, let's dive right into the last assets on our watch list for this week. So the next asset on our watch list for this week is my favorite, and that is the XAUUSD, popularly known as the gold spot. And in fact, in the last couple of weeks in this market, we have been tremendously profitable. Remember that the XAUUSD appears to be one of the most profitable assets on our watch list for this week. Now, for last week, or for the last couple of weeks, let me say, Now, with the way things are going, the gold's winning streak from last week appears to have hit a pause, as you will see that price is now trading below the 1,985 zone, which I will be letting you deliberating on when we scale up into the higher time frame. And despite the geopolitical tension between Israel and Hamas, typically boosting the demand for gold as a safe haven asset, the current risk on sentiment in the market presents a challenge to the gold prices. Now, let's take a quick review of what is really going on the higher time frame from a technical standpoint so that we can relate this with the fundamental expectation in this market to decide what our next line of action will be. So I'm going to be scaling up into the daily time frame, and on the daily time frame here we have a very beautiful and simple setup that we are going to be using to guide our trading decisions for this week. Now, if you look at the structure at a first glance, there is a peculiarity about this zone since the month of March. So we have the 1900 with very formidable support zone which has been consistent since in the last 7 months, and look at how this area had been a strong buying niche in this market. Now, in the month of March we saw buy pressure here. Fast forward to the month of July, buy pressure again, as you see how sellers were finding it difficult to break through the structure. Now, the same thing in the month of August, you saw buy pressure, and in the month of September, buy pressure again, and not until the last week of the month of September that we witnessed this strong breakthrough of that demand zone pushing price to the downside. And instead of price action dropping to retest the structure in anticipation of the downtrend, we saw what happened last week as price broke out of that descending trend line to incite a bullish momentum. And this could be connected to the escalating tensions in the Middle East, of course. Now, with the way things are going right now, you will see that price is back into a crucial zone as at last week's trading session, which is the 1985 level, which I am going to be using as my key level for this week. And the reason why I will be adopting the 1985 as our key level for this week is simply because of how this area had played a major role in determining the direction of price action since the month of March. Now, let's look at what happened in the month of March here. We saw selling pressure. It was more of selling the XAUUSD as buyers were finding it difficult to break through that area, and not until the month of April that we saw the breakout of that structure. Well, this lasted for about a month before price action finally broke down that level in the month of May, and since that moment price action has been trading below the 1985 area to emphasize the strength of the sellers at this point in time. Now, fast forward to what happened last week. We saw price action back into the 1985 with a sharp rejection of that structure. Now, with the information we have gathered here in the last 4 to 5 months, it is quite clear that this 1985 area is going to be considered to be a seller's territory, a supply zone. As you will see, every time price comes into this area, we always see selling pressure resume around that area, further giving us signs that buyers are finding it difficult to break through that area. So making this area a very crucial juncture in this market. Now, the question going into this week is, will this area continue to be a selling niche where if continued selling pressure persists below the structure, we might likely see price action retrace back into the 1900 zone? And one thing that makes this whole structure interesting is that this impulsive move we saw here may incite a profit-taking activity, as those who had bought the gold at a very cheap price, let's say the 1800 zone, or probably around the 1900 area may want to be doing some profit taking activity, which would reflect on the chart as a retracement back into that area. Then another thing is the breakout of that descending trend line, which from a technical standpoint, whenever we cite a breakout of a trend line like this, we expect that some point in time price will come back to retest that structure to incite another wave of bullish momentum. So that is one way we are going to be looking at it. That is, if continued selling pressure persists below the 1985. However, if price breaks out of the 1985 and comfortably sits above it, then this will be a good signal that we are going bullish. Now, to have an idea into how we are going to strategically position ourselves ahead of a New York session this week, we want to see how the market participant has been reacting to the zone around or below the 1985 to decide what our next line of action will be. And to do that, we'll want to scale back down into the 1 hour time frame. Now, scaling back down into the 1 hour time frame, this is what I was able to spot at the beginning of this week. Now, if you look at the structure here, the week started with around the $1,978.50 level, dropping down into as low as the 1,965 area. And as soon as price tested the 1,965, we saw buy pressure resume again, giving us a beautiful flat channel to work with for today's trading session. So we have price confined within the $1,978.50 and the 1,965 area. Now, from a technical standpoint, you know how we do it in this community. Whenever we have this kind of range, we want to exercise patience and wait for the signal to come, which always comes either in the form of a breakdown retest of the support line to welcome selling opportunities, or the breakout retest of the resistance line to welcome buying opportunities. Now, with the way things are going right now, and if we take into consideration the strong bullish momentum we have been witnessing in this market in the last couple of weeks, I'm of the opinion that the breakout of this resistance line looks more visible for us for this week. And now that we have already had the breakout of the neck of the resistance line, price appears to be coming to do a retest of structure. I will suggest that we wait above the 1978 area to capitalize on the next uptrend at this point in time. And if price continues to climb up, breaking out of our key level at the 1985, we look out for more buying opportunities, and the further breakout of the 1990 level will welcome more buy positions here. So we're looking out for buying opportunities only if price climbs above the $1,978.50 level. Now, in as much as we're looking out for buying opportunities here, you know how we do it in this community. We also want to keep our options as dynamic as possible. So with the way things are going here and with price selling pressure notice around that 1990 and the 1985, we might likely be seeing some profit taking activities as I have projected on the higher time frame here. And if that is going to be happening, where are we going to be positioning ourselves to capitalize on that retracement move, and how far will it go? Now, first of all, I would like to let us acknowledge this ascending trend line that I was able to spot here. And if you look at what has been going on since the beginning of this month, you will see price had consistently found higher lows in this market, giving us this beautiful ascending trend line to work with. So it is very likely that if selling pressure at any point in time takes over this market, we might likely be seeing a retracement back into the ascending trend line with the hopes of an uptrend continuation, or even break down the ascending trend line to bring price back into the 1900 level we identified on the higher time frame in anticipation of an uptrend scenario. Now, in as much as we're looking out for buying opportunities above the $1978.50 level, what is it that will change our positions, our buyers from bullish to bearish? Well, since we already have a range figured out this morning, well, I would rather want to see price slice through the support line of that range at the 1,965 for me to consider selling the XAUUSD. So the breakdown retest of the 1,965 will welcome selling opportunities, after which price gets into that ascending trend line. Ensure you secure your positions while we wait to see how the market is going to be reacting to that trend line. Now, if whatever happens here will now determine if we are going to be adding more sell positions or getting ready to buy more. Now, if price breaks down the ascending trend line, then we are likely going to be seeing a sell-off to the downside. And if instead buy pressure resumes above the ascending trend line, then we want to be getting ready for an uptrend move. Well, the whole current market structure is still screaming bullish, so we just need to be very, very patient to wait for the right time to join that uptrend move. And if you're a counter trend trader, you want to be positioning yourself strategically below the support line at the 1,965 to capitalize on the downtrend move. So this is my view here on the XAUUSD. Our center of focus for today, for the first half of this week, is between the 1,978.50 and the 1,965 area, where depending on the direction of the breakout will give us an insight into where price is likely going for today. So let's keep this in mind, mark out these levels on our chart, and let's use it as a guide to position ourselves ahead of the next move. So these are my views on the XAUUSD for today. If you have any questions or you need further clarifications, feel free to let me know in the comment section. So as usual, I'm going to be taking the next 10 to 15 seconds off to see if there are any questions before we round off for today's trading session. All right, so in the absence of no questions, I want to assume that we are all on the same page, and it's on this note I would like to call it a day here. It has been a wonderful moment with you guys today, and in fact we were able to attend to 4 major assets, which is going to be the asset we are going to be monitoring for this week, and this includes the USOILSPOT, the USTech100, popularly known as the NASDAQ. We also have the GBPUSD, and of course the XAUUSD, which is popularly known as the gold spots, and all of which we were able to identify simple setups that we are going to be using to guide our trading decisions for this week. So I implore us to exercise patience. Let's allow our structures to mature before we jump into any positions, and I do hope you are able to mark out these levels as we have marked them out, and let's wait to see how the market participants will react to these structures we have on our charts. For those who joined us for the first time today, I do hope you are able to gain 1 or 2 things from what we discussed here in this community. If you did, I wish to see more of you in this community, and I will also encourage you to be part of the subsequent editions, as the more time you spend with us, the better you get to understand how things works in this community and how our strategy works, and eventually be able to use the information you gather here to make your own independent trading decision. So once again, you are welcome on board, and I still look forward to seeing you same time tomorrow, 10 a.m. UTC, 11 a.m. West African time, as we come here again to review how well these assets have been doing so far, and at the same time get ready for tomorrow's trading session. So it's on this note I wish you all the best of luck, and looking forward to seeing you same time tomorrow. Do have a wonderful evening, everyone. Bye bye.